Hello, this is Ahura from Loaded Markets. We'll be with you with the global economic outlook in the week ahead, which is going to be the 27th week of the year. Before checking what we would see in the week ahead, it's better to see how we ended the last week and see what the data we had last week. So far, we had German current business expectation and the current economic condition on Monday, which showed that data they are a little bit less than estimate and market expectation. It's the same thing that I have been talking during the past months that the German economy is getting weaker. Probably it can even lose. It's the first. Its position as the first economy in Europe to the France, and the French economic data has been growing much better than Germany during the 5-6 months, and they have many other idea that why we are talking about the German economy is getting more risky compared to other economies, and probably, as I told, it can lose even its first the position as the first and biggest economy of the year. On Tuesday, we had the inflation numbers from Canada and Japan. Both of them, the inflation increased and showed the inflation in this area is not going as it was expected, is not slowing as it was expected. Same thing we had in Europe week before, and we saw that the inflation in May increased to 2.6% from 2.4% in April. Consumer confidence in the United States also fell to 100.4 from 101.3 in May, fell to 100.4 in June. Yeah, it was a little bit 0.4% was better than 0.4 market was better than estimates, but generally it shows that the consumer confidence is falling, which is continuous for the last 5-6 months again. And generally with the lower retail sales and lower consumer with the lower factory orders shows that the people they are not that ready to spend more money. We will check on Friday what we had on the spending. The real spending also fell. Let's check that on Friday when we had the real spending also. Where is the Friday's spending? Yeah, PC price and personal spending. The personal spending also increased only 0.2%, which means that generally the people they do not feel so much confidence from the economy in the next month, so they're spending less money even if they increase if their income increase. Generally, the data we had in the GDP on Thursday from the British economy was a little bit better than estimates, but in the UK, in United Kingdom, in United States, it was not as it was expected. Yeah, a little bit better than 1.3% estimate increase. GDP increased 1.4% in the US in the first quarter. Where is that? GDP numbers. Here, the GDP numbers, the first quarter increased by 1.4% in the United States. It was a little bit better than 1.3% market estimates, but generally shows that it's much lower than the previous quarter. It shows that generally economic data that we have from United States is mixed data. Somehow, some of them are better than estimates, some of them they're missing the estimates, some of them even if they are better than estimates, but they're lower than previous months. Generally, the data they are so mixed data. If you add this all the condition to the doubts and the uncertainty that we have in the market, especially with the U.S. election and the debate that we had on Thursday. So all this data they shows that we have to be more cautious about the general economic condition in the United States. These are on the home sales. Also, we can say that on the home sales, the new home sales and the pending home sales, both of them they fell. The new home sales lowered by 11.3%, and pending home sales fell by more than 2.5% in last month, which means that the current housing market is affecting much more from the higher rates for longer, and they're affecting the market with the negative efforts. So these are the data we had the last week, but in the week ahead, what we are going to have on Sunday, we will have the Chinese service sector purchasing manager index for the service sector. We are expecting to see a little bit increase or staying at the same level, not falling data on the service sector. It's the summer, where it's the summer, generally the service sector is increasing. So even the better than estimate or 49.5 estimate or a little bit better than this is expected, but generally we don't expect to see the data service PMI much more at above 50 and say about 50, or even if it goes around the 50, so it can stay around the 50, not so much higher than above the 50, because the data we had recently from the Chinese economy shows that the economy in China still, even if it's better in last 2 months, it gets better than previous 5 or 6 months, but still there are so many worries and so many concerns we have, and we have to be worried about that. The people, they are not ready to spend the money. Inflation is still negative or 0.1%. They are, all of them, they say that the retail sales should not be that good, and when the people, they are not buying, the PMI managers, the purchasing managers also is not going as well, is not going so good as well. On Monday, we will have ISM manufacturing index from the United States as well. We will have the service sector, service PMI from European countries as well. In Europe, in Italy, Spain, and Portugal, we expect to see a little bit better than expected service business activity in the service sector, but the manufacturing sector is not expected to increase. Same thing we are expecting to see in the United States. The ISM manufacturing also expected to increase a little bit, but still stay for the third month in a row under the 50 level, under the expansion level, which means that the economy, again, another sign that the economy in the United States is getting more pressured with the less factory orders, with the less retail sales, with the less sales in the housing market, and now with the less manufacturing activities. This is what we are expecting to see, and a negative data for both Eurozone and United States, and as well the United Kingdom. On Tuesday, we will have the flash data for the June inflation, which is expected to fall from May 2.6% in May that we had the last week to 2.5%, but it's a flash data, is not that much important. The main data, the final data will be published at the end of the June. So this is the flash data, but still we have to watch on that. We expect to see that the June inflation to fall back to 2.5% from 2.6% that we had in May. But unemployment rate is expected to stay to remain unchanged at 6.4% or even increase to 6.5%. This is what we are expecting to see for the labor market in the overall Eurozone. On Wednesday, we'll have inflation data from the Turkey, which we expect to see a little bit lower inflation from down to from 3.37 to 2%, or something like that. We expect to see a little bit lower inflation in Turkey, and the general inflation, the annual inflation, to fall back to 51, 52, 55%, the current number. The last week FATF exclude the Turkish from risky zone, so that's helped a little bit the Turkish economy, and especially the Turkish lira, to a little bit increase, but still it's like a long-term effect. That's the Thursday, right? It's a Wednesday. On a Wednesday, we will have from the United Kingdom, we will have the composite PMI and the Eurozone service PMI and the UK service PMI generally. The service PMI that we will have on Wednesday from the United States, United Kingdom, and the Eurozone. And generally, as I told, the service sector expected to see a little bit better numbers, but not the bright number. There's a difference, a better number than a bright number. We are expecting to see better number in some European countries like France, Italy, Portugal, but not in all the countries. But the service sector generally, while the service sector generally was better than the manufacturing sector, but still, as I told, we are not expecting to see the bright numbers, and the data should not probably would not support the economic condition and say that. So that puts the central banks in a doubt that especially in Europe, to cut the rates or not to cut the rates in June, or to cut the rates in July, or to cut the rates in September. But most probably they will cut the rates in September, and they will remain on hold for July meeting. But still, the data will tell us more this week. As I told, the manufacturing data, we are expecting for negative numbers. For the service sector, we are expecting for a little bit better numbers, but not the bright numbers. For the United States, for Europe, UK, and all main economies. On Thursday, we'll have more from United Kingdom. We will have the construction PMI numbers. Construction PMI numbers should increase a little bit. It's the summertime, it's the construction time, so construction PMI numbers can increase, but it would not affect the markets. Household spending in Japan on Friday will be very important to see that how the people are expecting, household spending has been falling in Japan in recent months, and we're expecting to see a little bit increase as the inflation also increased. But the people also, they have to get more encouraged to spend the money and not to wait more. Household spending probably will increase in Japan on Friday. Same for the housing price index in the United Kingdom. Probably we will see a little bit more increase in housing price in United Kingdom as well. That's the main. But the main topic of the week, the main news, the news of the week for this week, for the week ahead, will be the U.S. labor market data on Friday. NFP numbers we are expecting to see between 180 and 200,000 newly created jobs in June, which means that the unemployment rate is supposed to stay unchanged at 4%. But we see much more than these numbers. The unemployment rate fell to 3.9%. But until from 180,000 till 200,000 newly created jobs, if we see these numbers, which I expect to see this number, which means that the unemployment rate will stay unchanged at 4%. Generally, the data we are expecting to see this week, they are not going to be a surprise. So the current expectation still will be will take the place, and the people, they will believe in this, that the central bank in the United States will cut the rate 25 BPS in September meeting, but the November meeting will be under question. We'll need more data to understand what the central bank is going to do in November. So that means the current. Let's go to the chart and see the market reaction in the chart. And as I say that let's go to the chart and explain more in the chart. This is the chart. Hello, there we go. Yeah, this is the USD chart. As you see that the USD, as I told, the USD chart after the Friday's PCI numbers, PCE numbers. It's not, as I explained on the Fridays after the data published in a video that I published on Friday, we do not expect to see the US dollar to fall more, but we do not expect to see US dollar also to increase more. So something about some area about 105, 104.70, 105, 105.40 around these levels, but still it's a strong when we look at the general condition, economic condition, geopolitical condition in the world, and the difference, the spread between the rates in the United States, Europe, and Japan, we can expect the US dollar to still remain in hold and in a buy, so the higher levels can continue for at least for the week ahead. These higher levels in United States dollar will probably hold, and especially with the higher yields, we probably limit the gold bulls in the chart, and will not let the gold to increase much more. But the risk in the market and the demand for the gold for the gold safe haven, for the gold safe haven will not let the gold price to fall even. So that means that the gold will continue this slow uptrend, especially as long as it's above 38.2%, and still above, or better to say, as long as it's above 50% of its Fibonacci level, which is about around $2,220. But the generally gold still in a demand, and overall trend is still uptrend. And oil, as I was telling, the oil, if you go to check the WTI chart, we are in a summer demand season, but as we know, the economic, as I told, the economic condition and economic data say that we are expecting a little bit weaker economy, which means a lower demand, especially in the fall. So it means that the future contracts the price in the future contracts can fall, and that can affect the spot contracts as well. But still, we are not expecting to see the oil price to fall, because right now still we have this OPEC plus production cuts, so which means that the supply also is not so much in the market. So price cannot raise too much and cannot fall too much. So the price something around $80 is still expected to see for this week, at least for the week ahead. This and on the stock market, if we check the stock market, S&P 500 chart, where is the S&P 500? So S&P 500 chart, the downtrend started on Friday, can be the beginning of the next trend, and we can expect to see much lower numbers, especially if at the first day the S&P 500 can fall back under 5,440. That means that the downtrend can continue much lower, because we have many investors that you are expecting to take their money out of the market, go to buy the gold and other safe haven and stay cash. So the downtrend in the stock market can start, and that can be the beginning of the new trend in the stock market in the United States. Just the overall condition and the market situation that we had. If you have any other question, please don't forget to write down under this video. I'll try to get back to you as soon as possible. Have a good week ahead. Bye.